Want to start investing but don't know where to begin? You might have Googled how to set up a brokerage account. So what exactly is a brokerage account anyway? When it comes to your brokerage account, choosing the perfect one can be difficult to process. There are several online stockbrokers that you can compare, so you will know what type of account will best meet your needs. Luckily for you, Fortune Fastlaner, we have prepared a video that will surely help you know what a brokerage account is and how you can use it when investing and making money. Remember that while the first step is completing any of these amazing courses, the second and possibly more important step is taking action even if it's imperfect action. Want to get started in the stock market? You will want to create an account with a brokerage firm. You will have to have a brokerage account if you plan on cashing in your investment portfolio as a way to build up retirement savings or participate in your company's 401k plan. If you are feeling a bit more entrepreneurial, you can trade precious metals like gold and other coins with a brokerage account. If you want to invest money instead of just saving it, find a brokerage account. A brokerage account is a type of financial account that investors use to hold, buy, and sell financial assets. With them, you will have the opportunity to buy and sell stocks, mutual funds, and bonds. You may find that brokerages are more useful in terms of other services they offer. They are held at financial institutions with professionals who are licensed to do the actual trading of the assets under your guidance on your behalf. For the many investors out there, a brokerage account is the first step on the road to investing. Once you invest with a brokerage firm, you will have access to protecting your financial assets and holding too. Now, let's have an in-depth knowledge of what a brokerage account is. What is a brokerage account? A brokerage account is an arrangement in which an investor deposits money with a licensed brokerage firm, and the firm places trades on behalf of the customer. Brokerage services can help investors turn their investments into the most lucrative. The brokerage services act as a middleman and convert each trade into cash proceeds, which are subject to taxes under the fair market value of investment at the time of sale. There are multiple types of brokerage accounts and brokerage firms available for investors. Each model depends on the specific needs of your particular portfolio, which can make it difficult to choose just one option. Some brokers offer extensive investment advice without making a lot of bucks, while others charge economically unsustainable fees for the same advice. On the other end of the compensation spectrum, most online brokers provide a secure interface through which investors can place their trade orders. They charge relatively low fees for this service, but they differ in terms of order execution speed, trading tools, and asset scope. Investors should consider brokerages that offer more complicated options to help them become more productive and maximize their gains. Cash accounts are the simplest option. As such, these options are typically used if a client wants to buy shares without going through the hassle of setting up margin or other more independent options. However, there are some limitations on the type of activities that cash accounts can handle. Cash accounts may restrict purchases from being made with money deposited in the account, and they may make certain restrictions on short selling or stock borrowing behavior. If you want to do these things, you need a margin account instead. Margin accounts will allow for extending credit loans. The interest charged on these loans are well worth it when compared to what you pay for individual transactions for stocks or forex trading anyway. What are the types of brokerage accounts? Number 1. Full-service brokerage accounts. Most investors seeking the expertise of a financial advisor should align with full-service brokerage firms such as Merrill, Morgan Stanley, Wells Fargo Advisors, and UBS. Having a financial advisor is like having your own personal secretary. They will help you develop investment plans, do work on your behalf, and help execute the transactions accordingly. Although they may operate using a discretionary basis or not require client approval, advisors are usually paid a fee for their services. Investment brokerage firms charge either commissions on trades or fees for professional services. If you choose to work with a commission-based account, you will pay an advisor fee anytime someone invests in your company or buys or sells shares of your company stocks. The trade is profitable in that case too. One of the most common investments for advisors is with an investment account, which charges fees ranging from 0.5% to 2% on the total balance of your account each year. In exchange for this fee, there are no commissions when investments are bought or sold. The flat annual fees make these accounts suitable for investors who want to avoid the burden and cost of commissions. Low feedback stocks may be difficult to sell without enough buyers available. Do-it-yourself traders should be careful about trading these types of stocks so that they don't end up with a loss on their books. Number 2, discount brokerage account. The fee structure for full-service brokerage firms can be very pricey. Investors who prefer a do-it-yourself investment approach should strongly consider using discount brokerage firms, which impose significantly lower fees than their full-service counterparts. However, as the name suggests, discount brokerage firms such as Charles Schwab, TD Ameritrade, E-Trade, Vanguard, and Fidelity offer fewer services in exchange for lower fees. This may perfectly suit investors who mainly want to execute low-cost investments via easy-to-use online trading software. An investor will usually be able to open a regular taxable brokerage account or retirement account for free as long as they are able to fund the account with a $500 of opening minimum. Buying or selling most stocks, options, or exchange-traded funds can have little or no commission. Some discount brokers may charge fees for non-US stocks or thinly traded stocks, but these varies from one broker to the next. Treasury bonds typically require no commission to trade, but secondary bonds may vary. Many brokers such as Schwab, Fidelity, and E-Trade offers a wide variety of mutual funds for no transaction cost. Number 3, brokerage accounts with a regional financial advisor. When it comes time to open an investment account, some investors prefer the personal touch that a full-service brokerage broker would provide, but they also want the benefits of more specialized attention. Often, those investors consider using a middle ground between these two types of firms, such as Raymond James, Jefferies Group LLC, or Edward Jones. Broker deals act as a broker and financial advisor, whereas financial advisors just provide advice. This group requires a larger minimum account size and caters to individuals with a slightly higher net worth. However, over time, their services tend to be less expensive than traditional brokerage firms. Number 4, online brokerage accounts and downward price pressure. Launched in early 2015 under a mobile-only platform, online brokerage Robinhood offers commissions-free trading and has no minimum criteria for a deposit. Although it launched without PFOF in March 2016, the firm was a pioneer in starting to make revenue from this practice, investing in certain stocks just to generate pressure on stock prices. Market-making firms such as Citadel Securities or IMC often find it challenging to bring in orders amidst the high volumes of retail investors. Consequently, they encourage brokers to introduce them to customers who want an entry into institutional markets. This incentive would help pay online brokers like Robinhood for their services and allow them to execute the trade, which is necessary for market-making firms at high order volume. Stock market commission fees were always expensive and difficult to break. With the recent announcement of a new business model, it's brought relief from these hefty costs. Free trade commissions make it easier for individuals to get a fair price on their stocks, which means that the final product is cheaper for consumers than it would have been before. Number 5, zero commission brokerage accounts. In November 2017, Robinhood announced that it had surpassed 3 million brokerage accounts. In the same month, E-Trade revealed it had approximately 3.5 million brokerage accounts and over 3.3 trillion in assets under management. Number 6, cash brokerage accounts. A cash brokerage account requires you to deposit cash in order to start trading. This limits your options to the basics. For example, short selling a stock is not possible within cash accounts. Cash accounts can be either discount or full-service account. There are some drawbacks to zero-fee trading, but Robinhood does offer perks such as stocks and debit cards. Since Robinhood also doesn't have investment advice from typical brokerages, you will have limited options when it comes to treasury management, but rest assured they're not yet ready to support that arena of the stock market. But despite this setback, Robinhood's model proved to be so appealing that all major discount brokers now offers a zero commission option for most stock trades. Number 7, margin accounts. If you want to initiate trading, you need a margin account. This type of account allows you to borrow money to invest and use additional funds for advanced trades such as short selling a stock. There is some risk involved when it comes to margin accounts. In general, it's best to remain consistent with the amount of trading you do across both types of accounts for your first few years in the market. Choosing the right brokerage firm can be tricky. There are a variety of factors to consider, including the investing style you want, your short and long-term goals, the types of investments you're looking for, and the level of service and support you need. A discount brokerage may be perfect for experienced investors who want to keep costs low, while a full-service broker may be better for people who need a bit more hand-holding when trading. Now, the question is how to open a brokerage account. Opening a brokerage account should not take too much time. Before deciding which type of investment you should use, consider your investing style and goals. Are you an active investor who watches the markets daily? How conservative are you with your investments? Or perhaps you're more interested in retirement investing. Think of the associated costs as well. Although online brokers can be cheaper than traditional brokers, this is not the case for stock trades. You will still pay per contract commissions in most option contracts, ranging from $0.10 to $0.65 for a majority of brokers. Once you have selected a brokerage account that works best for your needs, then you can start the application process to open your account. We require a profile to be created before business can begin. Once your profile is in order, you will need to deposit some money into your personal account or social trading account, but either way, it's easy. First, some brokerages uses cash accounts. These are brokerage accounts that are funded by transferring funds from your bank account to the brokerage's account by mailing a check, wiring funds, or linking it. Second, margin accounts are a loan that you get from your broker to trade stocks, but interest will be taken out on your balance until the loan runs out. It can be an effective way to trade without spending as much money. So how can you open a brokerage account? Opening a brokerage account can now be done easily and quickly through the internet. You will need to register, provide some information such as your address, date of birth, and social security number. Once you're approved, it's just a matter of funding your new account online, either with ACH or wire transfer. Is it dangerous to have a margin account? Margin allows investors to do more things than traditional accounts. Some of the activities you can do with a margin account include selling short and buying on margin. These true transactions can generate additional returns, but they're also inherently more risky than simply buying shares of stock on their own. A margin account is dangerous to investors' finances only when it's accumulated much higher leverage levels for either buying or selling stocks in sectors like tech. You may have thoughts in making multiple brokerage accounts. Investing in many different places is always a risk, and it can be tough to keep track of everything. It could take days, weeks, or even months to find your assets. It's best to have one broker for long-term investments while opening a trading account for more speculative or short-term plays. If you love trading stocks and want to try it for free, there are a few options. When you're ready to unload your shares, check out these brokers who offer free trades and no commission charges. Robinhood emerged as a major player in the commission-free trading market, with dozens of other brokerage companies joining the ranks. Major names such as Schwab, TD Ameritrade, E-Trade, and Fidelity quickly followed suit. What is the major difference between a brokerage account and a bank account? The purpose of a brokerage account is to hold securities such as stocks, bonds, and mutual funds. Brokerage accounts also allow people to store a small amount of cash in the account that they may not intend to spend on additional securities or liquidity. A bank account is only able to hold cash deposits, which points toward the fact that banks are not highly customized. With a brokerage account, you can also often write checks or use a debit card. Today, some accounts even allow you to use a debit card or write checks. A difference between bank accounts and brokerage accounts is that bank accounts are insured for up to $250,000 by the Federal Deposit Insurance Corporation or FDIC. But brokerage accounts do not have the same level of protection. However, they usually come with Securities Investor Protection Corp or SIPC protection, which can be helpful in case a brokerage experiences difficulties. In conclusion, a brokerage account, like other financial tools, is an integral part of your financial plan. An account lets you trade investments which help you build long-term wealth and makes a significant impact on your investment strategy. There are many different types of investment accounts to choose from, such as stocks, bonds, and mutual funds. They can also be used by investors to supplement their retirement accounts such as IRAs and 401ks. However, they offer fewer tax shelters than retirement accounts but with fewer restrictions on when cash or profits can be contributed or withdrawn once the trader has opened an account. That's it for this video, Fortune Fastlaner. Remember to subscribe to our channel, and if you feel like we have delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work you put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you will start to see results. See you soon.